Trump's trade war was presented as a way to bring jobs back to America, but the result turned out very different. Instead of factories returning to the United States, Washington pushed the world toward closer cooperation. Across Asia and beyond, new alliances are forming, while BRICS together with the SCO are building the foundation of a self-sufficient system that can do without the United States. The results are already visible. The American engine of consumption is stalling. Families are spending more but receiving less. At the same time, China, India, and Russia are combining their strengths: labor, industry, and natural resources. Added to this is the rise in gold and silver prices, breaking multi-year records. All this shows that the global financial system is shifting in a new direction. This is not a temporary storm, but structural change capable of reshaping the balance of power for decades. Trump's trade war became the biggest blow to the American economy, a blow it inflicted on itself. What began as protection of workers turned into a global backlash. Tariffs aimed at rivals also hit allies, and cracks spread throughout the system. The numbers speak for themselves. Just a year ago, household consumption in the United States was growing by about 4% on a half-year basis. Today, it has fallen almost to zero. Families pay more for food, fuel, and goods, while their standard of living declines. Prices are rising, but the value of what they get is shrinking. In other words, Americans pay more and receive less. This is not only an American story. The tariffs pushed key partners who had once relied on U.S. protection. The G7 countries now see that loyalty is punished, not rewarded. Canada and Europe pay high tariffs on steel, aluminum, and automobiles. Japan and South Korea face rising costs in microelectronics and shipping. And India, which Washington had tried for years to draw to its side, suddenly faced tariffs of up to 50%. For Delhi, the signal is clear. It is no longer possible to maneuver between the United States and China. When loyalty is punished, there is no point in staying in line. That is why India is drawing closer to Moscow and Beijing, while trust in the United States is declining. As a result, America has been pushed onto the defensive. Abroad, it cannot invest without political risks. At home, it cannot keep prices under control. Competitors are already joining forces. Tariffs were meant to demonstrate power, but only exposed weaknesses. At home, consumption is stagnating, and abroad, allies are leaving. Against this backdrop, a coalition is forming that uses Washington's mistakes by combining labor, production, and resources, creating a new point of equilibrium in world politics. The warm embrace of Narendra Modi and Vladimir Putin sent a clear signal to the world, and India has stopped balancing between Moscow and Washington. This is not just a gesture. In reality, a strategic triangle is taking shape, where India provides labor, Russia raw materials, and China production capacity and logistics. India has the fastest growing labor force. Every year, more than 10 million young professionals enter the labor market, many of them with technical and engineering skills. Russia controls resources no economy can do without: oil, gas, uranium, grain, metals. China adds the entire spectrum of manufacturing, from electronics to solar panels, along with infrastructure that connects Eurasia. Together, all this forms the backbone of global industry. Moreover, Beijing is strengthening this alliance with money. At the latest summit, China promised $10 billion in loans and 2 billion yuan in grants to SCO countries. These sums are smaller than Western programs, but the loans are issued faster and with fewer conditions than those of the IMF or the World Bank. For the states of Central Asia or Africa, this matters far more than big numbers. Such financial support shields participants from U.S. pressure. When factories, pipelines, and power plants are built with Chinese money and equipped with Russian resources, Washington cannot block them. For India, the calculation is clear. With American tariffs reaching up to 50%, relying on the United States is pointless. In cooperation with China and Russia, it gains stability and room for growth as a future power. And this is no longer just an alliance of convenience, but the foundation of an alternative world order where supply chains, finance, and resources are concentrated in Eurasia. This triangle is ceasing to be merely an insurance policy against the United States. It is becoming an independent system that is starting to reshape the global balance. Beneath the steppes and mountains of Central Asia, lie some of the world's least developed riches, rare earth elements such as copper, uranium, and lithium. These resources are the foundation of modern industry. Smartphones, electric vehicles, fighter jets, and advanced batteries cannot be built without them. For many years, the region remained underdeveloped. Infrastructure was lacking, and there was little technology for extraction. But now everything is changing, and China is confidently taking on the role of custodian of these treasures. Beijing has both the capital and the expertise to unlock these reserves. Chinese companies already control more than 70% of global rare earth processing, which means they have the equipment and logistics to expand their influence. Through loans and infrastructure projects, China is weaving Central Asia's wealth directly into its own supply chain. This means that new mines and factories do not send their products to world markets for dollars. Everything flows through Chinese pipelines and railways, often priced in yuan. Washington, meanwhile, is caught in a trap. Large-scale investments abroad have become a toxic topic inside the United States. Voters demand that money be spent at home. Imagine Trump announcing billion-dollar investments for mines in Kazakhstan or Kyrgyzstan while factories in Ohio are closing. The backlash would be immediate. This domestic constraint leaves the United States sidelined, just as the race for critical minerals is heating up. The strategic outcome is clear. By building a supply chain that begins in Central Asia and ends in Chinese factories, Beijing is constructing an almost monopoly on the materials of the future. From semiconductors to green energy, access to these resources will depend on China. This is no longer just trade. Control over critical minerals is a lever of influence in diplomacy, defense, and technology. And while Washington cannot compete in the region, the resource map is tilting eastward. The next clash will not be about tariffs, but about who holds the keys to the industrial engine of the world. The dollar has been the backbone of global trade for almost 8 decades, but that dominance is beginning to crumble. New statistics show why. From January to June, China's trade with BRICS and their partners reached nearly 6 trillion yuan, about $900 billion. That is a 4% increase despite the decline in global trade caused by Trump's tariffs. But the most important factor is currency. More and more deals are being conducted in yuan, bypassing the dollar. Central banks are also shifting course. Over the past 8 months, the dollar index has dropped by roughly 10%, while the share of gold in global reserves has risen to 24%, the highest level in 30 years. And this is not just symbolic, it is preparation for a world where the dollar can no longer be considered an unquestioned safe haven. According to the IMF, the dollar's share in official reserves has fallen to 42%, the lowest since the mid-1990s. Gold and silver are taking the vacant space. Metals are surging in value as investors seek protection from currency instability. Silver has risen by more than 36% in a year, and central banks' gold reserves have set new records. Over the past 20 years, India has signed contracts worth more than $20 billion for American weapons, from helicopters to reconnaissance aircraft. But today, that accounts for less than 9% of its arms imports. Russia still holds about 40%, while Israel is rapidly increasing its share. With current tariffs, it is unlikely that Boeing, Lockheed Martin, or Raytheon will secure major orders. Symbolically, things are changing as well. Direct flights between India and China have resumed after a long hiatus, signaling a willingness to restore trade and human connections. For Modi, ignoring Beijing is no longer an option, especially as China controls a significant portion of the technologies and supply chains necessary for growth. Meanwhile, the rise in precious metal prices is not just a market story, but a signal of how fragile the dollar has become. Silver has surpassed $40 per ounce for the first time in 14 years, gaining more than 40% this year alone and over 130% in 2 years. Gold is also surging. Central banks are replenishing their reserves at the fastest pace in decades. The situation in the London market underscores the seriousness of the shift. Silver lease rates, which had remained near zero for years, have risen by more than 200 basis points. Traders and industrial companies are scrambling for supplies, and metals are being actively withdrawn from storage. Since silver is essential for producing chips, solar panels, and electric vehicles, its shortage means rising costs across these industries. Washington is already sounding the alarm. Authorities are preparing to include silver on the list of critical minerals, opening the way for state reserves. But scaling up domestic production is difficult and expensive. The country will likely have to compete for the metal on the global market just as China already controls its processing. Gold is sending a similar signal. Its share of global reserves has risen to 24%, the highest level since the early 1990s. Central banks are essentially signaling that real money is regaining ground against paper currencies. All these changes show where trust is shifting. If countries start settling in yuan or gold and holding reserves in silver and other metals, the dollar loses its role as the anchor of the global economy. We are not just witnessing a price spike, but the laying of the foundation for a new financial system based on real value. And here the picture comes together. Trump's tariffs undermined U.S. consumption. India is turning toward Russia and China, and Central Asia's resources are embedded in Chinese supply chains. Precious metals are sending warnings, silver at multi-year highs, gold in record reserves, and the dollar falling. All of this is leading to a world where Washington no longer sets the rules. What do you think about this? Has BRICS cornered the American economy? And what does the rise in silver mean? Share your thoughts and subscribe to the channel. See you in the next video.